So we took that 1K just this month up to $15,000. Now remember, this is using the futures. What's going on? It's Ryan here, CEO and head quant at happytrader.io. Today, we are going to be looking at the backtest for the NQ futures using happytrader.io, our proprietary indicator, which absolutely obliterates all other indicators on TradingView. Just wanted to open up the weekly video with that one. And this might look like super trend, but we're not trading off of these little buy sell signals like super trend. Come on now, we're doing better than that. We're using these uptrend and downtrend signals as our criteria. We're going to be looking at the 45-minute time frame. It's been performing really well. Swing trading seems to be pretty popular with the channel, and frankly, I enjoy it myself. I'm more of a swing trader. It gives you more time to be right. And one exciting thing is that we have hooked up automation. Automation is coming to Happy Trader at a different price tier. And this is one contract to the NASDAQ. Yes, it's a demo account. That's because we're testing automation. And that's off of this signal here on the 45-minute chart. So I figured why not take the opportunity to run a few back tests while we are actually running a demo with automation. So we're going to go ahead. First thing we're going to do is just look at the health of the market before we get into the back test. And you can just see today, Friday, March 22nd, 2024. If we go to our volume, you can see they're starting to load up on these bear shares. And usually that precludes some sort of dip in the market. And then, of course, if you look at today's date, you can kind of see we've been, kind of fighting to get up and break out to the upside a little bit. But you know what? This is kind of chopping down a little bit. It's not a super weak signal. Like this would be a weaker signal here. This one obviously is super strong. We're going to do some back testing here, see what we have on the long side, and we're going to do some back testing and see what we have on the long side and the long and the short side. All right, we have our back testers up. We're going to go ahead and just put on deep back testing, and we are going to just reset all parameters here just to defaults. And that's how we're going to do things here. We're going to turn off the long and the short. We're going to go with the long only first. The first thing we're going to look at is the year to date. So if we change this to the 22nd, we're going to go ahead and pull up our strategy tester just a little bit here. Let's just go with a $1,000 account, just a really small account, one contract, smallest size you can trade with. You're going to want to pad your account with more than this, spoiler alert, but with our strategy, it tends to do pretty well, especially on the long side and especially in a bull market, obviously. But you can see just we're not going to put in any pyramiding. We're just going to do a straight up $1,000 account, one contract long, and then we are going to make sure that our dates are set, and then we're going to just generate the report on the 45-minute chart and see what we have. And you can see here, looks good. Looks good. One thing of note, we're really looking bullish here on the NASDAQ because normally we're only at 1 out of 3 trades won, but you can see also the drawdown very low for the long side, 1,500% gain. So we took that 1K just this month up to $15,000. Now remember, this is using the futures. This is highly leveraged. The NQ, even one single contract, if it goes against you, can blow you out. But you can see that this didn't even dip down into the red. This thing just literally cruised all the way up. And yeah, it had this dip here where a lot of people would have sold. It had this uptrend here where a lot of people would have taken profit around here, just the monkey brain. And you want to take profits where you can, and you never go broke taking profits and all that stuff, right? But you can see the profit and loss looks good. If you look at the total trades, 16 trades, not too bad. If we look at the actual trade log, you can see that the winners are much larger than the losers. And in fact, there's almost 50-50. But if you just held on for the ride, or if you just didn't know what was going on, and then you checked from the beginning of the month to almost the end of the month now, you can see that these buy AI signals are just absolute beasts. And then you're using your downtrend signal essentially as a closeout, not necessarily a stop, but a closeout signal. So if you want to go long and short, if we go down to the 5-minute, who knows what we have here? You can see the difference. So 742%. But, are you going to be able to stomach these drawdowns? Are you going to be able to turn a blind eye? Are you going to be able to automatically liquidate your account or automatically fill your margin calls to allow these probabilities to play out, right? So on the 5 minute chart, the long and the short's fine, but on the 45-minute chart, it's not. For a macro time frame, you really need to be going with the trend. And with Happy Trader, it just completely crushes the market. And hey, if you're someone who likes to take early profit, here you go. At the end of the day, we are starting to roll down and correct slightly, which is why. But you just need to be careful in these markets. You need to make sure that risk protection is at the forefront. But a lot of folks like to trade derivatives like options and or the micro indices, which would have done really well. If you're in a bull market, if you're going to trade short, you have to know when to take profit because all those dips are going to get bought. This is a buy the dip mentality, okay? So that's the way the cookie crumbles in a bull market. Long only is going to be great on mostly every time frame. And you can see just the proofs in the pudding with Happy Trader, just absolutely crushing it for this month. 1,500%. I mean, that's not to scoff at. That's some serious gains there in 16 trades. And one thing I want to do though is go back to the long and the short, and I want to show you one more thing. Even though we had a negative expectancy overall, just signal to signal, not only did you have the chance, more than a chance, to take profit based on just the equity curve. I mean, if you get from down here to up here and you're not taking profit, you're absolutely nuts. If you look at the list of trades, you can see that even on the losing trades, in many cases, you had an opportunity to take profit compared to just sitting there and waiting for it to go signal to signal, being lazy and waiting for a loss. So if you're going long and short, you're going to want to make sure that you're taking your profits. If you know that we're in a bull market, don't be a knucklehead. Take your profits, right? Again, this is not financial advice. I'm not telling you how to trade. This is just something coming from a quantitative researcher who knows these types of things. So just be careful if you're trying to short this particular bull market, which is at all-time highs. And we also have a developing buy signal, looks like, heading into the end of the day that might just push up into the very end of the day. We have a little bit longer. It's 2:30 p.m. and we're going to be hitting power hour here soon. But that's going to be the long and the short of it, pun intended. And you can see that the long only is just the outperformer. What I also want to do is set up the 5 minute backtest for the month of March. And you can see here we had a pretty big dip even on the long only. So you need to be careful with these futures, right? You need to have risk management in place. Now, the way I like to trade these is if I put on a long position here and I think I'm going to get wiped out, what I'll do is as it starts to go a certain percent negative, let's say it goes $500 negative, I'll put on a short position, make it delta neutral instead of just closing the trade out for a loss. And then when the first trade brings its head back up above water, equidistant to the amount of the delta hedge or the dynamic hedge, that's when I'll go ahead and start to pair that hedge off. There's a lot of ways to do that. You can use puts, you can use offsetting futures like the MNQ. You can use the ES if you want to use two different indices, but you have to watch out because the NASDAQ likes to move more than the ES. But you can see lots of opportunity. And at the end of the day, 1900% gains on the 5 minute chart, a lot more trades on the 5 minute chart. So that's something to be aware of. Happy Trader still to this day uh, just performs better than anything out there. And really a testament to the hard work we've put into it. We have quadrupled the price. Anybody who's in a Happy Trader, members who may be watching this video, you are locked in at your price. Your price will never go up. Anybody who wants to come in who's new, we've been trying to preach this thing for 2 years and you missed the boat. So you need to get in now before we raise the price even more. A lot of our competitors are charging $1,500 to maybe $6,000 for these setups. And then we're also going to be doing some automation. And that's why we have this single trade trading right off of this 45-minute signal. And right off this uptrend signal is where we automatically took the trade. And you can see, so one contract and 6,600 profit. And then if we go to the strategy tester and just pull up the report, let's go ahead and you can see 6,600 profit, right? So matches up great, and that's always good to see that our back tester does match up wonderfully there. And then we plan on setting this live, probably starting with the micros, which is 1/10 the size, and seeing how it goes. But yes, super excited. This is a super promising thing here. we need to get more retail traders on board. If not, we're just going to sell this thing to Goldman Sachs or some bank. We need to get more of y'all on board, more of the retail community here. That's what this was designed for. And we really want to put you on, so to speak, as far as making you privy to things that are going on under the hood. Because if you get rid of all of the happy trader stuff and you're just looking at candles, you'll say, oh, wow, look at that big uptrend. Let's buy calls. And then boom, you get wrecked, right? So that's something you really want to avoid. And that's what Happy Trader does. My name's Ryan, CEO and head quant here at happytrader.io. Have a great day. I hope you're enjoying the new weekly format. Don't want to burn you guys out. And happy trading. Have a great day.